Hi folks, Clint Taylor here from the Property Investor Centre. Today I've got a interview with a successful property investor. His name's Kritzo. He's based over in Wanganui in the Manawatu. And Kritzo's been investing in positive cash flow property for the last few years, ever since he started with us in our e-coaching property mentoring program back in just over 5 years ago, I think it was. So Kritzo's gone on to achieve some really cool things. He's ended up buying 4 different properties over that time, and all of those properties have been multi-income blocks of units. So a block of 4 in Rotorua, a block of 3 in Palmerston North, and then another 6 units over in the Greater Wellington, over in Wainuiomata and Lower Hutt. He's done some really smart renovations to those properties. Massively increased the rental return, and also massively increased the capital value of those properties. Built over $1 million worth of equity gain just from those 4 properties, and more impressively has been able to create a passive income of around $76,000 per year, which is surplus rental income over and above all of his expenses that he has to own those properties, including the mortgages. So he's created a $76,000 a year income from those properties in under 5 years, which I think is exceptional. So I'll bring on Kritzo, and he can introduce himself, tell his story, and share with you a whole lot of information about his journey and his property investing to date. And I'm certain that there'll be some absolute gold nuggets and what Kritzo's got to say. Okay, Kritzo.
Great, thanks, Clint. Really appreciate the opportunity to share a bit of my own journey along with my family's. So as you can hear, my background is I'm from South Africa originally. I met a Kiwi girl probably 12 years now, better calculate correctly, on a Contiki bus in Europe, and and we spent a bit of time traveling the world, and eventually decided it just makes sense to come and settle here close to her folks, which is in the Manawatu. And then I really discovered Wanganui, which is an amazing place to just to live and bring up a family. We've been here for 9 years now. So I've been interested in property investment from, I suppose, like my late school days. A series of events happened in my own family, and my dad was the main breadwinner. He passed away at a young age, and my mum basically raised us. Now my dad was a dentist, and he had several other businesses and things on the go as well, and he prepared really well for events like that, and I saw firsthand what preparation could do, but also how important the few properties that we did have, how important that became in the financial stability of our family, and how my mum could basically look after the 3 of us. We were 3 boys, and basically not have to go and work, which is an absolute blessing, on top of the tragic events. But yeah, so I got really interested in that, and my mum, she was also very interested in property investment, but she she had her own way of doing things and her own challenges, and she always encouraged us to at least try and buy our own home as soon as we can. But a lot of her advice came from more I suppose what Robert Kiyosaki would call the middle class type advice, which is to buy your own home as big as you can, have a big mortgage, and that's your home is your castle kind of thing.
Yes.
And I that's what I knew, and I guess that's what a lot of people that are middle class or workers class would probably hear from their own parents and grandparents.
Absolutely, yep.
And it sounds like great wisdom, but yes. So I only at university, I think I started getting interested. That's when Robert Kiyosaki's book came out, the Rich Dad Poor Dad book, and I never read the book for about probably 12 years after it's come out. But I knew about it because of people talking about it, and And at some point, I got involved with some people that knew a bit more about it and then explained to me what an asset is. Up to that point, I would have told you an asset is basically what the bank would call an asset, which is, or what an accountant would call an asset, which is something that's meant to appreciate in value, and you would be able to lend money against the asset. So and from that perspective, your own home is really useful, and it's become really useful in our own property investment business. But yes, so what is a real asset? That's something that I really only got to grips with through doing your course, your e-course. But also thinking about other things, So if something doesn't put $1 in your pocket, it's not an asset. If it takes $1 out of your pocket, it's a liability. And it doesn't mean you shouldn't have liabilities. I mean, we have all sorts of liabilities. That's life, Just being here is a liability because it costs money. It takes money out of your pocket, and you can make it as big or a small liability as you want. But what Robert Kiyosaki teaches us is to expand your means and build up your assets, so that the bigger your assets, the bigger liability you can take on to fund the kind of life that you want and the kind of life that you deserve. So yeah, so that's how I got onto the journey. It's a bit more than 30 seconds to a minute, but
yeah. So give us a little bit of just a real quick summary now of what you have gone on to do since working with us in our property mentoring program. Just give us a very, very quick, like a 1 minute.
right. Okay.
The number of deals that you've done and what you've done to them, just quickly, and then how you've done things. Just like a minute summary of your results, basically. Yeah.
Okay, so I just want to say up front that I did what you said in the course and what I learned in the course, and I looked at lots of properties, lots of deals. I spoke to lots of agents, and I mean, if you also, I think Kiyosaki's and Donald Trump's investment advice is to look at 100 properties, maybe make offers on 10, and then maybe go unconditional on one. So it's that kind of nice.
Yes.
Yes. And when I first read that, I thought, no, that's easy, but it wasn't. It was actually a lot of grinding to have a proper look at 100 properties. That's a lot of grinding and time. So, but by doing that, I actually got to know what is a good deal and what is not a good deal. And yes, 1 in 100 properties could be a good deal, but 99% of them are not great at all.
That's it.
That's something that I think for newbies, that could be quite, when I say newbies, people that are starting to invest, I'm still a newbie myself. I'm still learning every day. But that is quite a daunting thing. So to work through that first 100 properties, that's your baptism of fire, I think.
Yes.
And once I've done that, I actually realized that the deals that are available through the Property Investor Center are really, really good gold nugget deals. And I probably would have not, I don't think I really appreciated that up front. I thought I could outdo that. I thought, no, that was something I could show you how it's done, but it's not like that. It was a humbling experience. So then I bought the first property, which was probably my scariest one I've ever done. And that's partly because I've made some mistakes in the past. I've had a bit of a dabble at property investment. I was pretty arrogant. I thought I could do it. I'm a civil engineer, so I'm a professional. I've been to university. I've done well at school. So this game is easy, and it wasn't. It was the ultimate equalizer for me. So it really brought me down hard to earth, which is good. To keep me humble. So after the mistakes, I was actually pretty gun shy, but what was really empowering through the course was good solid information on how to do due diligence on a property deal. And that is the facts on due diligence, and the empowerment that you get from that is what gave me the courage to grab that first deal and basically go unconditional on a block of units in Rotorua, which was a pretty good cash flow, bread and butter type property, 4 units. That block of units we bought for 440,000. We haven't done a lot to it. We've over the last few years we've just put in some heat pumps, some extraction in the bathrooms and kitchens. So we spent about 20 to 30 grand on it. So all up maybe $470,000. We were very, very fortunate that the rental market picked up very well. It was a great time to buy. It was a flat time, and at that time, I didn't really. It was a flat market, so I didn't expect. I wasn't expecting any fireworks. I only bought because the numbers made sense, and the numbers made sense. Had to make sense that day, otherwise I wouldn't have made the purchase.
Exactly.
We were just on the right side of the market, and that was more luck than anything else. I don't believe anyone can really forecast a market.
Yeah, I mean, you were buying for you as you just touched on. The deal had to stack up the day that you bought it, so you were buying. Yes. You were buying for positive cash flow, and
that's right.
Any capital gain you got over time was a bonus.
So that what you say there is extremely important, and that's also something that I had to really combat within myself. So for me, the capital, and I think for a lot of people, we've been taught that the capital gain and the growth, that's the big money. And over time, yes, it is the big money, but you have to be careful that you don't fall into the speculation type trap. Speculation is trying to time a market and then play a timing game. And only a very small percentage of speculators are really successful in that game. And those guys are absolutely on top of everything. They're pros at the game. As opposed to cash flow type investing, which has got nothing to do with the market. The market could go up, the market could go down even, the market could stay the same. You have bought for a totally different reason, and that is the income producing revenue from the property or from the business. I mean, a business works in the same vein.
That's right.
But what a property has that a business doesn't always have is that the property is a fixed asset. The banks will actually borrow you money, lend you money against that asset. So it's a really powerful income investment. So we bought for cash flow and for cash flow only. The rental market took off, the market took off, and today those properties would be worth over 700,000 at least.
Yeah, quite easy.
Some recent valuations done, but since then I think it's even increased.
It will have, yeah.
So and then that was good, and I remember buying this property at the time that my first little girl was born, and I was in the hospital going unconditional, not going unconditional, actually doing the settlement on the property. So it was an interesting time for our family. But
pretty busy time.
Pretty busy time, Clint. But also the importance, the reasons for why I'm doing all that, and the reasons why I'm doing all this work and this homework, and having looked at 100 properties and all that. That became really crystal clear with the birth of my little girl.
Yeah.
At the same time, and suddenly everything is in a different perspective, and you think far ahead of things like education and just own security and being able to provide. So then we that was a good deal. I didn't have to do too much, so I kind of felt like it was a bit too, and that's what most of these deals are. It's not sexy deals that makes you look like a hero. It's actually pretty straightforward. There's some work that you can do, but it's not a it's definitely not a spotlight flamboyant type game. It's just bread and butter with a bit of jam on top, and that's what you do, and you rinse and repeat, and you rinse and repeat. So after that, we bought a few units in Palmerston North. Same thing. It was a flat market. I did like where the location was because it was close to town where people can walk to and go and shop. But they just want their 2-bedroom unit. They want to have the internet and, watch TV and just, have a good life and be able to study. Students would like the location, older people would like the location. And so far, all the deals we've purchased would have that kind of component, would have, what service are we providing to the market? What does your market look like? Because in the end, you need to be able to sell your product. And for us, the sale would be the rental contract. So,
yes.
So your product is, how much do people want to live there? How nice is it for them? And when I'm done with the deal, when I've done the renovation, I stand back and I really try and be honest with myself. If I were in these people's shoes or my marketplace's shoes, would I want to live here? And would I, is it good enough digs for me to, make me excited? So I want to say, yeah, I'll sign up for $300 a week, get my internet, park my car, and live happily with my girlfriend, and in some cases even maybe a little baby, or if I'm an old person and I have to really start cutting down on the things that matter and downsizing, would I feel comfortable and safe here and secure here to live here, and would I? And if
it's like doing market research, isn't it? You're making sure that the property that you're buying and then the level to which you're renovating it is going to be to a point where people are going to want to live there and pay you, in your case with those units particularly, pay you a premium to live there because it suits all of their needs.
Yeah, so what excited me about those 3 units in Palmerston North is that they were under-rented and they were they were untidy, a bit outdated. The carpets were a bit tatty. And really, when I stood there, it's like, I would never want to live here.
No, that's right. They were cosmetically distressed.
Yeah, they were. And so, but what was really handy at the time was talking to different property managers, and this is where a property manager that's worth their salt is also worth gold to you. The property manager could show me examples of other units that were done up almost more to an apartment-like standard that fetched a lot higher rent, almost 40% more than what they were rented at the time.
Wow.
And because I saw that in the valuation, I thought this is the kind of deal I'm after, because now my buying rules at that time, I actually changed it so that any new property we buy, we want to be able to recycle our deposit as quickly as we can, and we want to show a healthy, a reasonable cash flow, positive investment on completion of the deal. And since then, that's been kind of my rules going throughout. Is if I can't at least get my money back after the deal's been done, and that must be within a year, no longer than a year, and I can't show a positive cash flow, then I'm passing on the deal. I'm walking away, and someone else can do that. And the reason for that is because of time. Because the time it takes to do a deal and to get a deal through is valuable time, and you can get stuck with the wrong kind of property and the wrong deal, not being able to recycle your deposit for years, hoping for the market to go up. It doesn't, maybe it crash, you're down and out, and your whole game has come to a grinding halt.
That's right.
So
that's the opportunity cost of buying the wrong property.
That's absolutely right. So for me to be a sustainable investor and building a sustainable portfolio, those criteria has to absolutely be met. So we did. We went in and we basically we held some cash back. So this is another important thing I think for people is your position sizing. And if you don't know what that is, it's how much do you put in one deal? And I struggled with that at the beginning because I wanted to hit home runs right from the start. And
most people do. Yeah.
Yeah, and I did, and I looked at stuff, and when I start mentally working through, so okay, I have to buy this, I have to take settlement. Then I have to do work on it, and then you calculate how much you have to do and how long it's going to take. Before long, it's like, this is a 5-6 year deal that I'm going to have to grind out, and use some of my own salary to compensate, and hopefully by the end I've hit a home run, but it's maybe 5-6 years down the track, and is that really where you want to go? It's not where I wanted to go. So I had to look smaller and smaller and smaller until I could find the niche that worked for our personal circumstances, our financial circumstances, but also one of our goals is for Gemma not to work. So my wife is not working, and I'm the sole breadwinner, and that's one of our other goals. So it had to fit that as well.
Nice.
And it does. So it works really well. So yeah, we went in, we did the flats up to a standard that's impeccable, that I would live in it myself, and that was basically everything, painting, carpets, new kitchen. We did up the bathrooms, and there's a bit of a trick in that on what to spend money on and what not to spend money on. You can easily over capitalize. At that point, the advice from many people were not to spend too much money, but because of the returns I could see in the new valuation, I could actually see that spending more money than most people would have actually did get us that real premium. So, so don't be cheap on these things either, I don't think, because you probably just run yourself in and you just penalize yourself, because I calculated at one point just every $10 of rent that we could raise the rent by was probably another $10,000 of the valuation on top.
By the time you cap it out, yeah.
Yeah, by the time you cap it out. So getting your money back becomes much easier. Yes. And so you have to spend money, make the money back. And that's something that that became clear in that deal. So
when you're planning a renovation, and I think you're particularly quite good at this, when you're planning a renovation, is you need to do your research and make sure that you are meeting the market, but not exceeding it. So depending on what the property is, where it's located, you need to do your research with your property managers and look at the rental potential, and you can take that accommodation up a level. And then get that extra rental premium, and that's exactly what you did with that.
Yeah, and preferably 2 levels up, because if things go wrong, then maybe you've just made that next level. Then I like having a bit of a safety factor.
Yeah, nice.
So it's like an arbitrage. The word is arbitrage, is where you buy and sell something in the same market. So in that same market, that same property was actually worth 40% more just by what I did to it, and then how I marketed to a different market group, if you know what I'm saying. It wasn't, the market didn't move anyway. It was flat, and it only started lifting after we did that. But we happened to spend $380,000 to buy the property. From memory, $380,000. It was valued at $410,000, so we had a bit of equity in there. And we spent about $25,000 per unit, which is a lot. It was 3 units. But that was worth it. In the end, yes, it was valued close to $600,000 after that. So we were able to get the money that we put in to do all of that. We were able to recycle that equity out pretty much within a year. And that means we were ready for the next deal. So we were pre-approved, ready for the next deal. And now all these things are stuff that I've learned in the course. There's a few other books that I've also read. I never ever stop reading, and one should never ever stop learning and reading. It's really important. Really important to keep on top of that. But the actual strategy, the practicality, and the relatability in the New Zealand, the local market, was all from the e-course. And I mean, the e-course, we made the money on the e-course back basically 5 times with the first deal, and probably almost 40 times with the second deal, just to.
And what about the third and fourth deal that you haven't talked about yet?
So I thought that was pretty good going.
Yeah.
Now, some things changed a bit for us and in our family, and certain money kind of became loose elsewhere. And so this is the thing also for people to remember, is that each person's means are different. You know, you don't. There's no sense in trying to chase Mr. or Mrs. Jones or someone else that you've seen, or some guy some hot crack investor on TV or in a magazine. Like, each person's means and situation is unique, and you can use whatever you've got to either get started, or even then to lever up and move your way up the
absolutely.
grow your
Rather than looking around at everybody else, sort of focus a bit more inwards.
Yes, well, that's the most important quality, I think, for anyone would be to stand and look in the mirror and tell yourself, where I am today is a result of my own decisions and the things that I've done in the past.
That's right.
And where I will be tomorrow, or maybe next year, or 5 years from now, will be a result of the things I do today, tomorrow, and over the next 5 years to get me there.
Perfect.
And once you're at that point, it means you've taken absolute responsibility, and it means you can take control of these things and be productive. If you look at over the fence at other people and start comparing, you've already lost the game.
Yes.
You're going to start blaming other things. You're going to, the agent didn't tell me this, my lawyer screwed me over on the deal. Before you know it, it's everyone else out there, but not you.
Yes.
Once your language starts going towards blaming other people, focusing on other people and what they do and haven't done, you have lost control, and you're not taking responsibility for yourself. So that's one of the things.
It comes back to that very first module in the e-coaching program, mindset and attitude, and getting that right, right from the start. It's like the foundation to building a house. You've got to build a solid foundation, and the mindset and attitude is absolutely key to all of the stuff that we're doing, as you're pointing out now.
Yeah, Clint, we probably have to talk a lot more about that first chapter, because that is absolutely the foundation, and it's really psychology. All of that is psychology. Successful investment is probably 95% psychology, and only 5% is the actual knowledge, the hands-on stuff.
You forgot the action.
And that the action. Well, yes. But if but to take action, your psychology has to be in order, because if you still hear maybe a teacher's voice from when you were a little boy or a little girl telling you that you've done it wrong, or you're useless, or maybe it was your mum or your dad, or maybe it was someone else, and we all have these little voices still in there. If that stuff is still in there, you won't take action.
That's
you
right.
won't, because you'd be afraid to fail, or you may have a need to be right. You may start over-analyzing, and you may miss the deal completely. You may not pull the trigger because you'd be scared, or you may jump into the wrong deal.
Happens so many times.
Jump into the wrong deal, boots and all, and chuck it all in. Almost like a gambler type attitude. All that stuff goes down to your own psychology, and I can recommend anyone the stuff that you learn in the first chapter of your e-course is enough to get you going, and it is enough to make you a successful investor. But don't ever stop. Go and find some of those things, because it helps you not just to be a better investor, it actually helps you deal with some stuff from your own past. If you're in a frame of mind of self-blame, doubt, anger, fear, guilt, I think I said shame, you will make all the wrong decisions, and you will actually go and make mistakes so that you can prove to yourself all these things about yourself. That's what you would do. You would self-sabotage your own chances at success so that you can say, oh, you're stupid. I knew it.
To reinforce your internal belief you've already got. Yeah.
Yeah, you will do it. You will go and stuff up a deal just so that you can hear your teacher's voice saying, oh, you useless boy, or something like that.
Absolutely. And I think people basically completely underestimate the power of that. And because it's something that's subconscious, and it's just in us, and it's in all of us. It's happened to all of us at some point. When we were younger, these things have happened to us, and they shape who we are and who we grow up to be, and the way that we think about all sorts of things, and the way we behave, whether we think we're worthy or not. It's a big deal, and most people are just not aware of that, and how much that affects the outcomes that they have in their life.
Absolutely. That was eye-opening, actually, really, for me to understand how those things impact on your decisions. Because once you've gone beyond that, and there's a process and there's a road, but once you've gone beyond that to a state of more acceptance and, being, at some point I even felt guilty for wanting to be wealthy and wanting a lot of money, because at some point, maybe someone taught us that, you're being selfish, money is evil, all that, and that is totally unuseful to anyone. If you maybe decide you want to be wealthy so that you can give to a lot of people for really good causes and good reasons, that's an amazing reason to go and be successful. But also you're delivering a service in the process, like all the people all the units that we've done up, they are happy people, happy tenants in those units. And all of them, before that, they were pretty dingy and
they were. You're improving the accommodation stock, in those areas that you're investing in. You absolutely are. Yeah.
So it took me a while to start feeling, grateful. Gratitude is probably the strongest tool, and if only every day you go and write down maybe 2 or 3 things, or even say it to yourself what you're grateful for. But be grateful, and be grateful to the universe for the things that we have.
Yes.
Suddenly you're in a position to then receive more and to give more. And if you're not, then you would be the opposite. You would be self-sabotaging. So because of these things, and I also found, Clint, that one of the key things for us that changed was when we started tithing with intent. And if I say tithing, I mean giving. So giving back. So basically looking at our finances and say, with what we've got, we want to give 10% for this cause that we believe in. And it's to say thank you. And it's we want to give it away, because this other 90% is enough for us. We need to live with that. Once we started giving, suddenly the psychological stuff falls away, and you start seeing things at a different.
It kind of opens you up.
Yeah. You suddenly see a deal that's been sitting right in front of you. That's an awesome deal. Where if you were with the negative frame of mind, you would look right past that deal.
Yeah, because you're kind of clouded. You're clouded with all that other stuff, going on. Yeah.
And you would probably talk yourself out, if you weren't to do, if you're not in the right frame of mind, you would talk yourself out of a good deal easily.
Yeah.
But if you're in a grateful state of mind, you would see the good deal, and you would be able to act. Now you're in a position where, okay, we can calculate the downside, and we can make sure it's limited. We can calculate the upside, and if the upside is reasonably larger than the downside, then it's a great deal. You shouldn't walk past it. You should embrace it.
And I think what you've just talked about there is you could summarize that by saying, you were taking the emotion out of the decision-making process. So you were looking at buying a property, and the emotions that come up, there's doubt, it's scary, there's all these things. You're scared. Okay, well, what if it fails? What if I can't make it work? But you're taking all of that emotion out of the decision-making process. Do I buy it or do I not? Because you are looking at the things that really matter. So you're looking at the numbers. You're working through and analysing everything. You're doing your homework. You're making informed decisions based on facts. And that's how you take away the emotion out of the decision-making process, and that stops people being. When you can do that, that gives you the ability to act or to take action, rather than being frozen by fear and at the 11th hour, pulling out of a deal that you really should have bought, but due to your own fear, you couldn't go ahead with it because of the uncertainty or whatever it was.
Yeah, absolutely. That's exactly right. And I want to encourage people. You have to write down your criteria long before you even look at a deal. And it doesn't mean you can't go and change your criteria. Absolutely. You can change it. You can go and review it and think, oh, maybe I've been a bit too aggressive on this, or maybe I need to be more aggressive on it. You can always change it, but don't think that you'll be in a deal and you would be able to, by pure discretion, be able to just rattle off numbers and then make a decision. You would have to have a written criteria that you can go back and check this deal against your written criteria.
Does it measure up? Yeah. Does it measure up?
This box, does it this box, does it do that? Is it cash flow positive? Is it the type of maintenance that I'm prepared to take on, or is it maybe out of my league? Is it is it pitched at the right market? Is my market actually looking at this kind of thing for where I want to go? So all those things you need to write down.
That's exactly right. Yeah.
So the reason why I talked about gratitude and giving and tithing is because suddenly money started coming from elsewhere, Clint. It's not money that I bargained on. It was another source, and I don't want to get into detail, but it was just suddenly we had this other extra chunk of money as well. And then the next two deals that came up, I would have probably, if it wasn't for this other chunk of money, we would have done at least one of them. But because this money came into our life, and I thought, what's the best way to invest this to be sustainable and to make it grow? Because this is the other thing also about money is as people get money and they plan how to spend it, But because of all this mental stuff that we've done, my thought was, how can I best invest it so that we can get the best return, to keep investing, make it grow, and then go and spend the fruits of our labor.
Absolutely.
And so the next two deals were in Wainui, and these were also same thing. So it sounds boring, but it's rundown flats.
Wainui Amata in over the hill from Lower Hutt, wasn't it?
Yes. So Wainui Amata. I like Wainui Amata. It's a bit of it's a kind of a village in its own self. I do understand that. I will probably say that if there's a down market, places like Wainui Amata would probably feel it a bit more than other places.
Quite possible.
But Wainui Amata is still half an hour from the city centre of the most livable city in the world, which is Wellington.
Yeah.
And that's not me saying it. That is the world saying it. If you go and look at these surveys and things, Wellington is an awesome place, and then Wainui is only 10 minutes from places like Petone and Lower Hutt, maybe a bit more, 15 minutes, where there's lots of jobs. And people are prepared to drive there and go and work. And so what I liked also about Wainui, there's some really strong communities there. So there's some diverse cultural groups, and they like sticking together and looking after each other. And that's the kind of market we wanted to pitch at. And I wanted to just give nice housing to that market sector. So these units were once again run down. We went in, we did full renovations, did up the kitchen, the bathroom.
So what was the first I mean, you bought two properties together, didn't you?
Yeah, so both of them are on Wood Street, not too far from each other, but the first one was a set of four, so 3 units and a house, a 3-bedroom house. So we bought that for $450,000, and the renovations all up cost us about $150,000. So we spent quite a bit more on the house because it's a 3-bedroom house.
Yeah.
We put insulation in. We put we made it more spacious. So we moved out some of the hot water cylinders and bought these new external ones just to make more space because they were little 1-bedroom units. And what I saw, this is the thing that excited me about this property is when I talked to the property managers, she said that there is no 1-bedroom units in Wainui-Yamata on the market. And I thought, well, I'm sitting looking at 3 that if you make them really nice, anyone that works in the city or in Petonians, these places, if they're nice, you've got your own 1-bedroom patch. A lot of people would pay good money for that.
That's right.
And it turned out that actually happened. So we made it as nice and as tidy as we can. Brand new. Well, not brand new, but as good as new.
Yeah.
Your new carpet smell and your new paint smell. I think the smell actually sells it in the end.
I think so.
And the rents were astronomical. It was more than I projected.
No, you got really good rents for those.
Yeah, granted that the market started moving as well, and that was luck. I didn't really. That's not something you can plan or see. It was just, once again, if you're in the right frame of mind.
You make your own luck to a certain degree, though, Kritzo, and you've done that.
Yeah, if you're in the right frame of mind, you've done your prep, and you've said no to 99 out of 100 deals. That one deal is worth it, absolutely worth it. So this one did, and the rents, it kept going up even now. But the valuation, more importantly for me, this was in a time, mind you, where loan-to-value ratios, the banks started getting a bit nervous, and the Reserve Bank constricted some of the lending that was allowed to investors. But even with that, yes, the valuation came out at $900,000 after we've put in $600,000. So that's a 50% increase on the investment, which means we could take just about every penny that we put into it. We could borrow that back.
Awesome.
Which allowed us to then do the second lot, which was two shops. Now, these shops are really interesting when I say shop. They were shops from the 1960s that were converted into 2 flats. I think it was a 3-bedroom on one side and a 1-bedroom on the other side, but they were pretty DIY. I have to say, Clinton,
they were pretty rough, eh?
Landlord there was just some people should just not be landlords, and if you're in this business, it is a business. Use the right people. If you're not prepared to pay for a property manager, you've got to ask yourself why. What is it that you're trying to achieve here? Because
that's right.
The value that a property manager adds is you get your time back, and for me, time is way more important than money. I've only got so many hours a day. Some of that time I want to spend with my family. Some of that time I want to be an engineer because I love the work that I do. And some of the time I want to sleep, and do all these other things. So
time is pretty finite. We've only got so much of it.
That's right. So you've got to leverage your time, and the only way you can leverage your 1 hour is to appoint other people that do good work to go and do what you do. But if you've got 4 to 6 to 10, and I mean this is now business, so you leverage other people's time, and a property manager is the best way to leverage your time. That's the one thing. The second thing, what I like about a property manager is they manage 150 plus properties. They know the market way better than what you ever will.
Absolutely.
Because as an investor, may get to know 5 or 6 in one area, and that's your 5 or 6. And you wouldn't know what's actually happened around the corner or over the hill, but they do.
Correct.
And even if they come back to you and say, look, we need to raise the rent another $20, or we suggest that we do $20 to $30, that's big money on your valuation, on your capital valuation.
Well, I mean, every $20 a week is another $1,000 a year in income. And then when you capitalize that out, that's adding capital value to your property as well. So
that could be, if it's $10 a week on 4 units, that could be easily $30,000 to $40,000 on top of your valuation,
easy.
which you can go and borrow that back and reinvest it. That's powerful. That's leveraging right. Other people's money and other people's time. So yes, a property manager comes at a premium, but they also add a premium that's absolutely worth it. And if you're serious about a business, then I can't see how you would do it otherwise.
Absolutely.
Some other people, so my personality is not property management, the detail stuff. I'm a bit more like an overview type person. There are other people that are excellent with detail and managing properties. Good for them. They should have a go and do it, but they've got to realize they only have so many hours a day, and you would only be able to have a finite number of properties in your portfolio. And it depends on your goals. For some people, that may be your goal. It's just to have a finite number of properties in your portfolio, and that's what you want for your life, for your retirement, or just for supplementing your income. For me, I want it to be as hands-off as possible so that I can live my life the way I want to live it.
That's right. And I think another really valid point there, Kritzo, when we're talking about using a property manager, and leveraging off these other people, so that we're not using all of our time up to do these things, but we're also using specialists that are most likely going to do a better job than what we can. But the other point is, look at where your properties or your property portfolio, look at where they are located. Could you do all of that? So you've got a block of 4 flats in Rotorua. You've got a block of 3 flats in Palmerston North, and you've got about another 7 units over in Wainuiomata in the Greater Wellington area, and you live in Wanganui.
That's right.
So you don't live close to any of those properties. I mean, you're an hour away from Palmerston North. If you had to manage those yourself, it would be an absolute nightmare, and you'd drop the ball, and it would be
impossible. And this is another part of my analysis, and one of my buying rules is, can I afford a good property manager with this deal? And if I can't, I walk away.
Yeah.
So for me, when I first started with investing with you guys, Clint, I felt, so this is now going back to my own unuseful frame of mind. I felt stuck in Wanganui, small town, nothing's happening. It felt like the world is busy going by. It's all happening in Auckland. It's all happening.
Yep.
Yeah, it's all, and I'm missing out. You FOMO, and then you start almost getting a bit beside yourself.
Right.
None of those things were useful, and then I sat back. I remember sitting back and thinking, look, we're in the 21st century. We've got the internet. I can if I really plan my life well, I can theoretically invest anywhere in the world. There must be a way, because I love living in Wanganui, because I don't want to be in the city. Like I said,
don't want traffic jams.
Time is more valuable than money, and I don't want to be driving 8 hours a week, which a lot of people do, sometimes even more.
Easy.
And that is a full working day. I could just sit at home and put my feet up. But no, okay, it comes at the price that I'm not there. We're in the thick of things, and often I think that's actually quite valuable to be a bit on the side. I do that now. I think that now, on the side, and be able to look in from the outside in some of these places. So that's why I then started looking at what services are there and what courses are there that I can do from Wanganui, because I can do something from here on the internet. And that's how I got, that's how I come across your e-course. Then, which has been absolutely, out of all that, I've done a lot of courses and training, but best value for money by far. For the amount of money you put in and what you get out, it is orders of magnitude the return. I can recommend it to anyone that's serious about getting out and doing some work on themselves and getting busy themselves to act, coming back to what you said before. And there might need to be, the action that you might need to take is to first start looking inside yourself, and start doing some of that chapter 1 work, to figure out, where do you want to go? Why do you want to do this? What does success look like for you? It might not be money. It might be that you just want to spend a lot of time with your family.
Well, it's just might be just getting enough passive income to buy your time back.
Yeah, that's it. That was my reason. That's my main reason, and I'm just about halfway there now. So exciting stuff. but yeah, so getting back to the other deal, so the other deal was these shops, and they were done really bad. The landlord really stuffed it up. So we got a good deal, good price, $280,000 for these two little units. One of them was really big, like almost cavernous inside it. It was dark and dingy. The walls were kind of a dark brown color. Like, I don't know why you would even want to paint anything like that.
Madness,
you know?
madness. Yeah.
And that is a perception thing, which is amazing. So we went in there once again, light colors, brighten it up, ripped out stuff. We actually end up using quite a bit normally in the kitchens. We end up using a lot of the original kitchen. We just do different fronts, presentation. I do put in extractor hoods anyway. The government now says so we all have to do it, but I just do it anyway because it adds a bit of, it looks clean and sleek and stainless.
Well, and it's looking after the maintenance of the property. Who wants moisture from bathrooms and from cooking going through your property anyway?
Yes.
So it's common sense, isn't it?
It is, and this is now coming back once again to some people. They think cheap, so I don't want to put in a nice extractor because it's costing me $600, and I don't have that kind of money. But in the background, the steam and the moisture is going right through the property, and your maintenance bills are coming in, and you've got mold, and the tenants walk away. You've got vacancy because you're not looking after it. So your $600 you saved you actually cost you way more in the long run.
Yeah.
But people, and it comes back to that mindset of earlier. Like if you're stingy, then money is not going to come towards you.
Yes. It's big picture thinking as well, and that's what you said. You tend to focus on, not so much the detail, but the bigger picture. And when you're thinking, bigger picture, you can sort of see all of those things. Well, if there is a problem with mold and what have you, and ongoing maintenance costs because of not a decent extractor unit or whatever, it's causing you more problems in the long run than putting in decent extractor fans to start with, So
yeah, no, absolutely. And then bathrooms as well. So I just do it standard bathrooms and kitchens. So we turned the one unit into a 4-bedroom. It's a 4-bedroom unit.
Wow.
With a nice lounge and a living area. It was a big living area, nice big kitchen. The bathroom, we actually kept the bath. It's like this funky corner bath that would probably work for families, And then the next door unit, we actually turned it into a 2-bedroom unit by doing some internal drywall, partition wall type work. The builder was great. So this is the other side of this. Your team is so important in these things. And when I say team, it's not a team that you have to meet once a week. It's just the people that you assemble for the project.
Yes.
And I'm grateful. I'm fortunate that my job is also project management. So any type of project management knowledge or information that you can pick up along the way, I think it's always going to be useful for property investment, for renovation, or
definitely. Yeah.
But we turned it into this 2-bedroom unit, and the rents, we were able to lift it by 47% all up, and the value basically increased incrementally as a result. Once again, it surpassed my projections. I would have been happy with a 30% increase based on what we did, and I did my calculations on that. And now here's the other thing that I think people don't always appreciate of your strategy that you've taught me, Clint. And this is if you've added your value. So if you go and you buy below market or at a fair value, I mean, we say below market, it sounds like we're screwing people down. I'm not screwing anyone down. We're buying from a landlord that's let a place run into the ground, hasn't looked after it, and we're paying him a fair price for that property.
Yes.
And it's not a good price. It's not, I mean, not for him. For me, it's a good price, but it's not a great price for him. And the reason is because he stuffed it up, and right. This is the market. And this is the market. And it has to be a fair value. I'm not here to pay him some kind of a charity or a premium. Business is business. And what's in it for me is I'm going to run it a whole different way. and that would be my compensation for the risk I'm taking here. So
That's right.
with this strategy, if you can add value and you buy at a fair value below what the market would offer for a good property, that margin, that is the market's money. That is not quite your money, if you follow what I'm saying. So you're creating this money out of thin air. Now, the important thing about it is that when the market turns down, and it does, and it always does,
It always
then
does.
suddenly that margin starts shrinking, okay? But remember, that's not your money. That is money you've created through your arbitrage strategy or through your add value strategy. And that's your buffer. So that's your safety margin that
Absolutely.
gets you through the long, dry, cold period, so that when the good times return, you are ready, you've lived through it and ready to invest another day. So
yeah, it's a safe, as you said, it's a safety buffer,
yeah,
and that's the way that, that's the way that we, we always look at it. We try and minimize risk and diversify and do all those things. But, if we can create ourselves a safety buffer in value to debt, you can't beat it. Yeah.
Absolutely. So you get back to a situation where your downside is limited. And in those deals, we would have had to, the market would have had to now drop 30% to 45%, and in that one case, 50% for me to have lost all the market's money, but not even 1 cent of my own money. You know what I'm saying?
Exactly.
Like, even if I sell at 50% less of the new value, I still get every single cent back that I've put in, and I break even. Now, breaking all that work for breaking even is not great, but a 50% drop in a property market, that's a big drop. That's huge. So
it didn't happen post GFC. Across the country, it might have lost 10 or a little bit more on average.
Yeah. That's right.
15 in some places, but and that was a pretty big financial crisis worldwide.
Yeah, it is. And not to say that these things can't happen in the future. There could be worse things. There could be a depression, all-out depression. And this is the other thing what I like about little 2-bedroom and 4-bedroom and 3-bedroom units. In the difficult times, if you're still presenting a nice, presentable property, you would have other people come in
into that
looking
market.
Yeah, that would be a different market. There would be people that would have to downsize and downscale because they've overextended themselves.
Yep.
They maybe someone has lost a job. Suddenly they've got a family that needs to move into a much smaller unit. You would now have people vying for your property because it is of a right, it's that kind of size, and it's of a real, nice upmarket type value. That people still live there. There's people that would make what they have to do to put a roof over their heads.
That's right.
And so for me, my strategy is always thinking in the down market, would this still be a property where people want to go and live? Because if they do, it means I would still be collecting the rent. I would still be able to cover my mortgage repayments and service my debt, which means the people who's now in trouble that have to sell, I would be the person looking to buy their deals because they have to get out. And I would be relieving them. I would be relieving them of their situation because they would be in some dire straits, and they would be looking for people to help to come and buy this even at a discount because they are in trouble. And once again, I'm delivering that service. I'm not going to pay you a premium for it, but I'm going to pay you a fair price in today's market to take this property off your hands.
That's right. And the way that I always look at it, when people have challenged me in the past about, but you're offering and you're buying the property for a low amount, and I always say, well, I haven't got a gun at the vendor's head, for him to accept my offer, that must have been the best offer that he had on the table at the time. Otherwise, he wouldn't have accepted it. So it's helping him out. It's getting him out of whatever fix he's in, and enabling him or her to move on. It was the best offer available to him at the time. Otherwise, he wouldn't have accepted it. So it's
And
just,
you can't fight the market. You can never fight the market. The market is always right. If it goes up, then it's not going to come down because you say, oh, it's overvalued and waiting for a correction. You could be waiting for it to double or triple,
yeah,
and you wouldn't have done anything. But
yes,
the market is right. Or the market can come down and you can say, no, that can't be right. I'm just going to hold out until it recovers. And it keeps going down and down and down.
mm,
And at some point, it's so much down that you become desperate, but yeah, it's always, the market has got its own voice and its own signals. So the market's always right. So a willing buyer and a willing seller, if there's been a transaction at that price, that is the market. And quite often, I mean, Clint, you've taught me to look at how to value the property and to use valuers. And valuers, they go out and look at actual sales. So me offering this price, if I'm not offering enough, then my market evaluation would tell me that. It would tell me that I'm being a bit ridiculous.
that's right.
But if there's sales like that around, then my offer is a fair offer. And
It's not unreasonable. Yeah.
And in fact, it's great for both. The buyers and the sellers agree that's what needs to happen now.
Yeah, absolutely. So all up, those two lots of Wainui properties. So there was 3 flats plus a house plus another couple of flats. So 6 properties in total, was it?
Yeah, it was 6 in total.
6 tenancies. Yeah.
Yeah, 6 tenancies. Yeah. So yeah,
how did that deal end up for you? What was it's about a year?
Yeah. So
is it?
So for the 2 units, the shop that was converted, we bought for 280. We put in quite a bit, and that was because the roof and this in due diligence, I kind of saw these things and talked to the builders. So I budgeted to spend about 140,000, which we did.
Right.
But we put in heat pumps and extractors and all these things. That we did a lot of work. We did a lot of work. Yeah, and through, at some point throughout the project, because there weren't too many people, there weren't anyone there. We even had a break-in, and people stole the infinity gas units off the wall, and we had to replace that. And lucky we had insurance, so we got a bit of an insurance payout. But yeah, it was an interesting little project. So 140,000. So the reason why I mentioned that, it's not all plain sailing. There is things. There is things that you just, once again, if you've managed your risk, and in this case mitigating it through an insurance policy for those eventualities, then you'll be okay.
That's right.
So yeah, so we spent, so was it 420? Sorry, yeah, 440. And it was valued at 595. Yeah, $595,000. So yeah, so that's 100 and, did I do the calcs? Yeah, 420, and then valued at 590. So yeah, about $170,000.
Yeah. So I think from those 2 properties that you bought at the same time in Wainui. From the numbers you sent me, within 12 months, correct me if I'm wrong, I think you've created about $475,000 worth of capital gain or equity by what you've done with those 2 properties. Yeah,
that's right. But even more exciting is that from those properties, even all expenses paid, property manager, maintenance, operational costs, the mortgage, interest-only mortgages, it returns about almost $40,000 per annum in my pocket.
Positive cash flow.
Positive cash flow after all costs. So that's
rental income.
That's right.
Above all of your expenses to own. That's fantastic.
Yeah, and that is good money. That's good money. Yeah, I mean, interest rates are low. So
and you've done that in 2 deals in 12 months.
Yeah, that's right.
$40,000 of passive income from just 2 deals in the last 12 months.
That's right. And now we're ready to buy again. So
perfect. So you got your 4 flats in Rotorua, your 3 in Palmerston North, 2 properties which make up 6 flats in Wainuiamata. What have we got? 7?
Yeah, 13 in total.
Yeah. So, I mean, yeah, from and through smart renovation, a little bit of the market helping you out along the way with rents increasing, but certainly the majority of your, increasing in rents and increasing in value, you've done that. It's not so much the market. That the market's helped you, but it's been through your actions and what you've done that have given you the majority of your rent increases and your capital gain across the portfolio as well, and that's one thing that I'll certainly say, from what you've learned in our program, you've basically just gone out there and you've done exactly what we said to do, and you've done it really well.
Thanks.
The quality of your renovations that you've done quality work. You have absolutely improved all of those properties, and you're providing a really good quality accommodation for people, and you have got the results, the financial results to show for that. You've done a good job. You've thought it through. You've done your research, done your homework, made informed decisions, and then gone with it, taken the action and done it, and you've got the results to show for it.
Yeah, we've been really blessed, Clint. Absolutely, the strategy, I would say, accounted for about 70% of the gains, and the market maybe for another 30% on top. From what I could see. And yes, we've been able, through these deals, we've been able to grow our equity by $1 million.
Nice.
Yeah.
Nice.
And our cash flow, more importantly, our cash flow, by about $60,000 per year.
Yeah.
So that's great.
Yeah. And I mean, you've done that in 5 years. How long after you started the e-coaching program back in February 2014 did you buy that first block of 4 units?
It took me about a year, Clint. Yes, I did want to do it at my own pace.
Yeah.
And then like I said to you, I wanted to go and do it myself.
Yeah.
Which you should do. You should get out there and get stuck in.
Absolutely.
It took me about probably a year, a few months, almost a year, just to understand markets and how the market could work, figuring out which area is probably the one that you would be able to afford, figuring out how much you can afford, building your team, assembling the people that you're going to need along the way. So you talk to mortgage broker is an absolute must. They're worth gold.
Absolutely.
Property managers, accountant, lawyer, talking to some builders, getting an idea of pricing of things, property managers, which is a total different profession to an agent, the real estate agent. They different people. Real estate agents, the good and the bad and the ugly. A lot of talking with you, and this is actually fun, So it's actually a lot of fun, especially if you're more of a people's person, because you kind of talk to all these people and meet new people, and you wouldn't have even had to meet them if you went to go on this journey.
That's right.
Going to my local property investor federation association.
Right. Yep.
And Manawatu, and you run across other investors and you swap a few yarns and some numbers. And I mean, that's the time when it actually really feels almost bigger than being heard, because it's a tough time mentally, because you're doing all this work, but you don't see results. And that's maybe another thing I want to say is, if your process is good, the results will take care of itself.
Yeah.
So always look at, if you feel like you don't see results, cancel the results, throw it off the table, ignore it. Look at your process and evaluate your process. Is your process as good as it can be? Are you seeing as many properties as you can?
Yeah.
Have you built your team? Are you reading the right books? Are you listening to the right people? Are you doing your own quiet time every day to set your mind there. Are you giving gratitude? All these things. If your process is good, you always need to look at it and see, how can I improve my process even more? Are you spending enough time with your family? That's really important. I think it is.
Absolutely.
If you do all this stuff and you lose your family along the way, or you drift away from those, why would you be doing it? And also through these different...
It's about getting a balance to life, isn't it? All things right in life, you need to get a fair and equitable balance across all parts of your life.
Yeah. And that's part of the process. So all those things need to be one, and needs to balance out, and then the results will eventually come. And before you know it, there's 4 units sitting there, and they're looking like they need a bit of TLC, and the numbers look good, and there's no one else there. Yeah. There's no one else ready to buy. So then you jump in, and before anyone wakes up, because you found basically a diamond in the rough, and that's it. You're in. Once you're in with a contract, no one can come and take it from you.
What's my favorite saying, Kritzo?
Yeah, well, that's the one. I don't actually want to repeat that too.
He who secures first wins.
That's right. The one that signs, if you sign even a conditional offer first, you win. Because you can decide to walk away.
That's it. Lock it up, get it in contract, stamp your foot on it, secure the property.
No one else will get in past you. And it doesn't cost you any money to do that.
No.
All it takes is to print out a piece of paper, read the fine print, initial, sign, scan an email. That's it.
That's it.
You've got it.
Yep, exactly.
Still back out. You can still cancel the deal. Within a few days or weeks, if you've done all the things that you've thought. If anyone, if all the things that you thought about due diligence clause and all those out clauses. But it doesn't cost you a cent to make an offer. It just costs you a bit of time.
That's right.
And pull your finger out and do something about it.
That's right. What you were just talking about a couple of moments ago, you're talking about if the results are not coming, sit back and take some time out for a bit and look at your process. So, basically the way I see it, if you've got the right knowledge, if you've armed yourself with the right knowledge, so you've taken action and you've gone out there and sought the correct knowledge. So if you know the right things to do, and then if the strategy or the process that you're working, the way that you're going about, looking for deals or whatever, if your process is right, basically if you're doing the right things and you're taking action and doing the work, the results do end up coming. And you are absolute, proof of that. And you're not the only one. And another guy's just popped into my head now as well. And, he was, a little bit slow to start, I guess, in the way that he was working through everything and putting in the work, but the results weren't coming. And he really struggled for a little bit. But then suddenly once, he was persistent. He just kept putting in the work, with the belief that, it will come, it will happen. And then once he found his feet and worked through almost like an apprenticeship, I guess, he's going through building confidence, building knowledge, building a network of people that he's talking to and dealing with. And he just kept on doing it. Some people would have gone, this is too hard, I can't make it happen. In today's market, I'm stopping. I'll go and look for something else to do. Okay, or I'll just resign myself to the fact that I can't make it in property. I'll just carry on working my job forever. But he didn't. He kept on going. He kept persisting. He kept putting in the work. And finally, the results came. And I was talking to this guy last week. He got 5 properties in contract last week alone.
Wow.
And, he won't buy them all. But he got 5 deals that meet his criteria in contract last week. He's in the Christchurch market, so it's pretty soft down there at the moment. But that's the thing. You just got to be persistent. If you're doing the right things, keep doing it. The results will come.
Yes. that process thing, it can be hard because it's a bit lonely at times as well. I have to say, with the investment game, that's why it's important to slot in and network. And then if you really feel like you're losing traction, stand back, give someone a ring, like yourself, Clint or Shane, or ring the agent, just for a chat, and before long you you get energy from all that again.
Absolutely, and that's quite an important part I've seen in the guy that I've just been talking about. That was a really big deal for him. Like, he was doing our e-coaching mentoring program. We work through all of the content online and do all of the on-demand training content, but it was the one-on-one coaching calls with me in like a situation like we're recording this interview now. Was really, really powerful for him, because whenever he got to a point where he was getting frustrated or beating himself up a little bit because the results weren't coming, he wasn't finding the properties that he was wanting to get, and he just kept talking to me via a meeting like this, and I would just give him little tidbits of information that would help him move forward and just reprogram him a little bit, I guess, to a certain degree, and get him a bit more positive feeling, and keep pushing him. So he kept on going back out there and putting the work in, and finally results came. So it's a good point to make.
So something I want to say about that is just because the results aren't there doesn't mean you have a bad process. You could have a really good process, but luck is part of this game. It is so. But it's a chance. It's a game of chance. It is likelihoods. It's paybacks. So what that means is you need to play the numbers. You need to play. The worst would be for you to not play them. To not make your play, because that's when you lose your big winner. The big winner could walk away.
Yes.
And if you've got a good process, then you could be busy for a long time with no results, but you are playing the hands that is being dealt to you. You're playing and you're playing and you're playing, and at some point you strike the results. But if you get demoralized,
yes,
and in all those mental states that I mentioned before, that is just not useful, before long you sit on the couch and you're eating popcorn and feeling sorry for yourself, and you're not going to get a property like that.
No, that's exactly right. That's exactly
Once you're in that groove, you see, now you're busy reinforcing, you're a bad, you're a failure.
Yeah.
I did it again, and the next minute you watch a movie for 6 hours, and that's a whole rut, and then you've basically confirmed to yourself your fears.
That's right.
Which doesn't have to be true.
It's a really good point, and often it's not until we have the benefit of hindsight or experience over time that we come to realise what we're talking about now. And it's one thing that I've found over the years is often with the number of property deals that are coming across your table, or you're securing in contract, or that you're working on. Often we're putting in the work, we're looking at property, we're doing it, week in, week out, all of the time. And often you will go through a dry spell, where you're doing all of the work, you're looking at properties, for one reason or another, they're just not coming off. You might not be able to secure them in contract. Other people might be beating you to them, or, people are paying more than what you're willing to pay, so you're missing out there. Or you are getting properties in contract, but they're not proceeding because, they're falling over on the due diligence side of things. And for whatever reason,
walk away from those properties.
Yeah, for whatever reason, you'll go through a dry spell where, where you just won't get anything to be able to buy for a while. And I do honestly think it's often a feast or a famine. Where you have a big dry spell, and then suddenly you'll get 3 or 4 deals all at once, or in a very short space of time. And you just have to know that if you just keep putting the work in, eventually the deals will come again.
They come in almost in streaks. You get along, and this is maybe something you just need to play. This is something you can do at home. Just to get get used to chance. As take a dice, 1 to 6, write on a piece of paper, and then number 1 to 4, make it number 1 to 4 as dud, 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 dud. Yeah. Number 5 is big dud. Number 6 is, as a big winner.
Yeah.
Then go
a demon deal. Yeah.
Yeah. So number 6 is the one that the big winner, that the one where you make 50% on what you put in, without even putting 1 cent of your own money in. I mean, this is part of the strategy. You're not actually putting any of your own money into this. I mean, we leverage money off our family home.
Yep.
That I still have the home.
Yeah.
I still have the house. I live in it. I walk in it. I eat in it. And it's there. But I can go and get money from the bank, someone else's money, to go and do these deals. So and because I've limited the downside, I can't lose their money. But I can make my money using their money. And
that's right.
And that, do you know that the rate of return on using someone else's money is an infinite rate of return?
Yeah, it is. If you're not putting a cent in yourself, yeah.
Right. So yeah, I make 50%. People say, 50%, that's good money. And it is good money. But even if I made 10% on someone else's money, it's an infinite rate of return coming back to me, because I'm still paying this guy his interest.
Yeah.
And he's getting his 5 or 6, or she's getting a 5 or 6%, the bank person. But that extra 4% that I'm getting of their 6%, that is infinite. None of my money makes that. It's so you can scale this thing to be as big as you want it to be, or as small as you want it to be.
That's it.
That's the beauty of it. That's what I really like about it. And exciting. It's exciting times.
Nice. All right. Well, we've been talking for a while now, Kritzo. If there's maybe three takeaways, from this talk, for people, if there's 3 takeaways that would help them either get into investing, or be successful at investing, what 3 takeaways for people would you have? What have you got? Three key points that people can take away and use to help them with whatever they're doing with property investing. Getting started or starting to see some level of success.
I think the first thing that I probably would say is make sure that everyone communicate well. So when I say communicate well, you may have a partner or family. I mean, my wife, when I started with you in 2014, I made a couple of mistakes, and Gemma has lost some faith.
This is before you started with us.
Yes. Before I started with you guys, so Gemma wasn't quite ready for that. So I was in a position where I could have either just gone with it to try and show her that I can do it, or go and talk to her and play open cards and make a decision together. So I think that's my number one thing is, when you depart, make sure the important people around you know what you want to do, why you want to do it. They have to be in. It doesn't mean they have to agree with everything, but at least it needs to be a joint decision. That was important. And then the second thing is, the man and the woman in the mirror is the most important, So you've got the skills. If you don't have them, you need to go learn the skills. You need to put in the hours. You need to put in the work. You are responsible for your results, whether they are good results or bad results. Doesn't matter, as long as you know you're responsible, because if you realize that, it means you can fix your mistakes and you can carry on. Now, the other part of that is, because you're so important, if you need to take time out and look after yourself, then do that. you deserve it, because you need to be in a peak condition to be a good investor. So look after yourself, take responsibility. And then the third thing I would say is to get as much, get knowledge, but knowledge that can be applied. So useful knowledge. So applying meaning action. It's stuff that you should be able to do. Good knowledge is stuff that I can go out and do and take action.
Yeah.
There's a lot of other knowledge out there, and it's unfortunately so with the internet as well. There's a lot of crap out there. 100% of the stuff is not worth it. And to be fair, I first looked at your course and all the things come up, and it comes up for a lot of people. It's like, oh, what's in it? Where's the catch? There must be a catch somewhere. And often there is a catch. 9 out of 10 times some of these products do have catches. And unfortunately, it's a bit like the properties. You have to kiss a lot of frogs, ugly frogs, before you get to the prince or the princess,
Yeah.
And definitely, because your course by far, it's solid gold, So getting back to the dice game, what I said before, go take your dice. You've written down, dud. The 6 is the winner. And then go and roll your dice 100 times and write down the result. And see how many times does all these numbers come up, and then how many times do these come up. And then also look at how often do you get streaks where you get no 6s for maybe 20 or 30 throws, and then at some point you get a streak suddenly of 666, or maybe 5 or 6 sixes in 15.
Yes.
And it's like that with the properties, but it's also like that with the courses and the information and the books, and you've just got to play the numbers game. Roll the dice. Make sure you've got your downside covered. Always, that's the most important. Before you look at profit, look at the downside. Have you got it absolutely covered?
Yep.
Roll the dice, and before you know it, you've got a 6, and that's, on the long run, that puts you ahead in the game.
Yep. Perfect. Now, there was something else I was going to say there. I can't remember what that was now. But no, absolutely. And, I think, what you were saying about the person, you look in the mirror, the person that that's looking back is the key, is the most important, and it's, you're responsible for your results. And, I think that's, that's a really big thing. A lot of people, as you said, blame and, blame others and for their situation or their results, or blame the market or whatever. But you need to, and this is one thing that we see quite often, is obviously our course. We can give people knowledge, and we can educate people, and we can give them what they need to understand how to invest in property. But ultimately, our course is not a magic pill that that you swallow and then suddenly, voila, you can make $1 million. It doesn't work like that. It comes down to you taking responsibility and getting out there and putting in the work. And basically, from what we've seen, we've been in business for 10 years now, over 10 years now. We've had a fair few people go through the program. We know it works, as it works. Yeah. But it's not a magic pill. You have to take responsibility. You have to do the work. You have to put in, take the action on what you've learned, on your knowledge. The knowledge on its own is great. It's better than not having it. But on its own, unless you take action on it and actually get out there and do something, nothing's going to happen. Nothing's going to change.
You might as well. You might as well go and read a novel. It's
absolutely.
If you're not going to apply the knowledge, then it's just you're actually wasting time. But those things, the action part, it comes back to what I've mentioned earlier, to the things with, are you happy with yourself?
Yeah.
Or is there stuff that's happened to you that you're still beating yourself up?
It's shaping you. Yeah.
You don't want to make a mistake because you've been crapped on for making a mistake, and maybe you're the one. But these things are things that you've created. Yes. When I mention these things about the teachers, I had some great teachers as well at school, and many of them and the things that they've said has actually built me up.
Yeah.
And maybe they did, maybe they didn't. All these things are made up in your own head. if you remember something someone said to you, you've given it a meaning to you.
That's right.
It's not that person. You've given it context. And it comes back to my second point, the man and the woman in the mirror. That is the person that has given all these other things context, which then impacts on your decisions today and your ability to apply the knowledge and take the action or not take the action.
Yeah, that's awesome. All right, well, we should probably wrap this up, Kritzo. We've been talking for a fair while now. We've got some absolute gold here. So I just want to thank you very much for your time, and thank you very much for sharing your story with me. And I mean, I know most of it already, of course, because I've been working with you for 5 years. But to share your story with everybody else, and I'm sure from a lot of what you've talked about tonight, a lot of people will relate to many of those things, and it will help them out in some way to either get started in property investing when maybe they were holding off for whatever reason, or to be they'll pick up on some of the small things that you've said, and they will end up becoming a better investor for it. So yeah, thank you very, very much for your time. Awesome. And congratulations on your success so far. You have been, you have done really, really well. And that's awesome. I'm proud of you.
Thank you, Clint. That's nice to hear. Really grateful for you guys, grateful for the opportunity, and I'm totally grateful for my journey that I can sit here and speak. And there may be someone out there that relates to this, because it must have, because when I was in that position, I listened to a lot of people, and you don't relate to everyone, but no. there's someone there that may relate to your position. And for those people, I'm really grateful that I could share this, and I hope that it can help them along to go and do the same.
Well, that was a great interview with Kritzo, and I thank him very much for taking the time to share all of that with us, share his story, and talk about the investing that he's done over the last few years since starting with us in our e-coaching program just over 5 years ago. So Kritzo has basically gone out there and applied exactly what he's learnt in our e-coaching program, the strategies that Shane and I like to use. He's gone out there and done exactly that step by step. He's focused on the right kinds of properties that generate high yields, so multi-income properties, blocks of units. He's identified properties that were unloved but had potential to be improved reasonably easily. He's done those renovations and therefore increased the desirability of them, increased the rental return, improved the capital value massively, and created an equity gain there. Basically refinanced against the equity gain and recycled his deposit out into the next deal, and then just rinsed and repeated that time and time again. He's now got 11 income streams, or 11 units spread around the country. He's based in Wanganui, and through leveraging other people's time and expertise, has been able to do that and invest in places that do give him a good high rental yield and positive cash flow. So over that time, just with those 4 purchases, he's created over $1 million worth of equity, and more importantly, a $76,000 per annum passive income. So he's created more than the average wage every year, just from the property portfolio that he's built over the last 5 years. And I think that's awesome, and that's what's enabled him to have his wife at home with the 2 kids, because over that 5 years they've also had 2 kids. They've built a new home for themselves, had 2 kids, and his wife's able to be at home with the children and not have to work because of that $76,000 a year passive income that he's created through his property portfolio. And that's what it's all about, guys. That's awesome. If you want to be able to do that too, and learn what Kritzo has to be able to go out there and do that, please feel free to talk to us about whether we are a good fit for you to help you go out there and do the same thing. Okay, guys, that's all from me for now, and talk to you soon.